Hi everyone, I hope you're all doing well, and today we're going to be talking about Upwork stock, which is probably one of the most covered stocks right now on YouTube. I've seen a lot of YouTubers that are out there covering the stock market talking about this company, so I thought I'll have a look into it and I'll kind of give my thoughts on the company and if I think it's a good opportunity to buy, because obviously when so many people are talking positively about a company, you're thinking this must be a really good opportunity out there. And it's been on my list for a while as a couple of other companies that are out there. I think DraftKings, Golden Nugget, another two companies that I really want to look into. I still haven't had time to do it, but hopefully I'll get around to doing them stocks in a few days. So like I say, I'm going to take a look into Upwork. I'm going to see if it's a good buying opportunity right now. So as always, if you can smash the like button, subscribe if you're new around here, and we'll take a look. So if you do want to buy this company, there is a link in the description for an eToro account where you can set up there, and also a Trading 212 account, but Upwork stock. But first of all, what is the company? What does it do? Well, Upwork basically is a company that offers freelance work, and basically what you can do is you can put on there a service that you provide and people can go to Upwork and buy that service. So it's a freelance platform. So basically, if someone in my position right now on YouTube, if I wanted to get someone to do my thumbnails, I could go on Upwork for some a content creator that can make thumbnails, or if I wanted someone to edit my videos, some marketing for me, something like that, you could go on Upwork and look for someone to do that for you. So the platform itself looks like it's in a really good industry, because when we think about the amount of people that aren't going to be tied to, salaried for companies going forward, and the current situation and the work at home situation that we have, it seems like it's good for people in industries where they can just put the work on there and get paid for it. So I think as an individual, it's a good platform, and as a company as well, if you wanted to get someone to do a job in your company and you didn't want to put them on salary, you only needed them for a day, it makes sense as a company for you to go on there rather than paying someone a salary to keep doing the job if you only need them for one day. So I think as individuals, this platform is a really good platform, and also as a company, it's a very good platform as well, especially in the current climate as well. So basically, there is two companies in this sector that everyone talks about, which is Upwork, and there's another one called Fiverr. So we will be mentioning that company quite a bit right now. So Upwork, the ticker symbol is UPWK. Currently trading around about $20 as recording this video. It has been on a pretty decent run recently. It was down. It did IPO at about $20. It went on 2019. It was downtrending for quite a while, and then it went down with the COVID situation as well. And down there it was about $5, which is crazy. And since then the stock has shot up to about $20. So it has been on a pretty good run. It is about its IPO price right now. It is about a market cap of 2.4 billion. So we're still not talking about a massive company, but it definitely has been on a pretty decent run. Now it is worth noting, we're going to compare this to Fiverr, which is a very, very similar company to what Upwork is. And Fiverr is $166 with a market cap that's 3 times that of Upwork, and it has been on an even better run than Upwork at the moment. So we'll take a look at Upwork's financials and see how they're doing. Now we do know there's no P on here, which is going to be key, because obviously we want to try and value this company and see what kind of valuation it is. First of all, we've got a price to book ratio of 9, which is definitely pretty high. And when we look at the earnings and revenue growth, we can see that revenue on this company has grown about 10%. So it's a growth company, but at the same time, we're not talking about a massive growth company. We're not talking a company that's growing 20-30% revenue growth, something like a Huya, something like a Gang, or someone on them sort of lines. And especially when we actually look at something like Fiverr, their growth is a lot more than this. So yeah, the growth is, the thing is as well, I'm going to say this for Upwork as something else, is that the growth is very all over the place. There is some quarters where they're actually pulling out more than that sort of growth, and then sometimes it does go down quite a bit. So yeah, the growth is definitely all over the place, but one thing that is key here is that the company is currently not making profit right now. It is kind of in getting close to where profit is. But it is worth saying that the current plan for Upwork is that they're actually spending a lot of money on the marketing, and they believe that if they get a lot more users to the platform, them users will carry on using the platform and buy more and more services from Upwork. So even though there's not a profit, that's what they're kind of focused on, and getting more and more users to the platform, putting more money in marketing. So even though it's not making profit, it is quite close to being profitable sometimes. But just because of how much it keeps up in its marketing costs and everything like that, that's what's keeping earnings down quite a bit, where you see revenue in the other way growing. Now on the balance sheet wise, it is pretty decent. It's got a 5.4 debt to equity ratio. It does currently carry 14 million in debt. When we look at the cash, it's 146 million. So yeah, the debt to equity is pretty good. The cash to debt's pretty good. Obviously it's losing money, but when we look at the amount of money it's losing compared to the cash it currently has, it seems okay. It's got quite a bit of cash reserves that it can go through if it carries on losing this money. It would probably take about 3 to 4 years of losing more money before we would have to see cash getting raised. So it's worth noting that it does need to start making profit probably within the next 2 years, which it isn't forecast to do. So it does need to work on that side of it. But yeah, overall, right now as recording, it isn't too bad of a balance sheet. And on the insider front, there has been quite a few insiders buying some shares. Some of the key roles, one of the standout ones is probably Thomas Layton, who is the chairman. In March, he did buy a lot of shares. He bought about £1 million worth of shares at $8, so I'm sure he has a very nice profit on them shares that he did buy. And one thing that I do to help me understand sometimes a growth company, especially one that doesn't have a P ratio and a company that's not going to be profitable anytime soon. Obviously we have the price to book, but also I like looking at the price sales ratio of a company like this. And right now, Upwork has a price to sales ratio of about 7, which is a little high. It's not crazy high. It's probably about a fair valuation side of it, but when you do look at when it was at a price sale ratio of 2 and 3 and 4, that seems like a pretty decent price to sales ratio. But obviously being at 7 is pretty high. Obviously it was this high when it was an IPO. So when I look at the price to sales ratio, it is a bit higher than what I would like for this company. I would like it in the 4 or 5 range. If I was to buy at 7, it kind of indicates to me that it's currently about fair value right now. So overall, what's my kind of overall opinion with Upwork? Well, I do like it. I like the industry that it's in. I can understand the industry. I can see the industry growing. So it's a company in a great sector. The company itself's not doing bad. It has about 10 to 20% growth, but I would like the growth to be a little bit more than that, especially when you compare it to something like a Fiverr, for example, and you got a company like Fiverr that is growing huge compared to this company. And Fiverr is a bigger company as well in this sector. So I compare it to a company like Fiverr and I'm thinking this company is not performing as well as them. It doesn't have the growth as them. Does that suggest that the management team is better over there and they will carry on dominating this market? Now, the difference is that when you look at Fiverr's valuation, their valuation is crazy high. They're probably overvalued. You compare it to an Upwork situation and you look at the valuation and right now it looks like it's probably at fair value right now when you look at what the valuation is. So I do like this one and I probably would rate it a buy. The problem I have with Upwork is that, especially when you compare it to a company like Fiverr that's growing huge, but you are paying the valuation on that side of it, this company isn't performing as well as what it could do, I believe. So that's one thing that I'm going to say. And when I look at the valuation compared to the risk to reward, the share price right now for $20 for this company kind of looks to me to be okay. Like there's probably upside from here, but it's not cheap. It's not cheap for what you're paying for, and it's still an unprofitable business at this point. So for me, for Upwork right now at these valuations, I would have to see the share price drop for me to buy it, just so I have a good risk to reward. I think for me, the share price would have to probably be around about $10, I think, maybe a little higher, maybe $10 to $13. I would not mind buying it in that sort of range. That would be a pretty good valuation for me to buy into. But right now, looking at the stock price compared to the company's growth and comparing it to something like Fiverr right now, I don't think this company is exactly has a massive reward on it. Even though I do like it, I probably would rate it a buy. And at these sort of prices, I do see the share price moving in the right direction and the wrong direction. I just don't think the price is good enough right now for me in the current situation, especially when you look at the profit and growth side of it. So overall, that's my opinion on Upwork, guys. I hope you enjoyed the video. As always, if you can smash the like button, subscribe if you're new around here, and I'll see you next video.